President Bola Tinubu has approved the creation of the National Tax Policy Implementation Committee, NTPIC, to coordinate the rollout of the new tax laws. The committee will be chaired by Joseph Tegbe with oversight from Finance Minister Wale Edun. In a statement released by Bayo Ononuga, Special Advisor to the President on Information and Strategy, the committee will lead consultations across public and private sectors, harmonize tax rules, and ensure transparency. Members include Sonyade Okoli as secretary and other experts such as Ismail Ahmed and Rukaiya El Rufai. For some perspective, we have Professor Izielen Agbon, a financial expert. Thank you very much for being here with us. You have written a paper on the new tax laws, and you understand this tax law regime. What would it be like? Can you run us through it?
Well, thank you for inviting me. I think after the 2023 election, President Tinubu put together a subcommittee. This was in May 2023. And they came up with a Policy Advisory Council report. It was a National Economic Subcommittee. The consultants were KPMG. And they recommended that the government should broaden the tax base and consolidate the different tax laws in Nigeria into one big tax law that will be all-encompassing. Therefore, the government will be able to increase its revenue. This was the strategy. They are part of their monetary and fiscal policy strategies for sustainable development. So what you see the government trying to do is to implement the 2025 Tax Act that was passed in June. That was passed in June this year. You remember those 4 tax laws: the Nigerian Tax Act of 2025, the Nigerian Revenue Service Bill, the Nigerian Tax Administration Bill, and the Joint Revenue Board. There were these 4 bills that were just pushed through rapidly and signed by the president, and it was called a tax reform bill. But unfortunately, it is not every change that is a reform. And the key point here will be the implementation. This has been the bane for most of Nigerian policy. So the president has set up an implementation policy, and their task is going to be very, very difficult when it comes to mobilizing the task and bordering it and encompassing a lot of Nigerian working class people in this tax bracket, because like you know, the economy is in crisis. We have a condition of stagflation, increasing inflation, and increasing unemployment. Under that condition, you cannot get out of that economic problem by fiscal policies only and just increasing the amount of funds that government has or increasing taxation. This strategy might have worked in Lagos State, but I don't think it will work on a national level with respect to Nigerian development.
But is that not the purpose of this committee? And I know you said they have their task cut out for them, but when you have someone like Taiwo Oloyede, and knowing what he's been able to achieve so far, do you feel a sense of optimism that perhaps your concerns would be addressed before the rollout?
No, the thing is that when I'm a consultant, when you are dealing with a consultant like the consultants that wrote the KPMG consultants, they are operating on a model, on a taxation model. So in May 2023, as part of the advisory board, they advised the president on consolidating a lot of taxes. Let me give you an idea of what they consolidated. The whole idea was that you can simplify Nigerian tax law. So they took the Consolidated Company Income Tax Act, the Personal Income Tax Act, the Petroleum Profit Tax Act, the Value Added Tax Act, the Capital Gain Tax Act, and the Stamp Duty Tax Act, put them all together into one Tax Act of 2025. That is just too big for you to implement. Even in the, let's say, next 6 years, very, very big, because there is multicollinearity between these different tax acts. And you are going to find out that there are so many changes when you are implementing them. You are going to have, it might look simple on paper when you are talking of each of those things and how it will affect foreign companies. But when you are looking at the informal sector in Nigeria, which 80 to 85% of Nigerians are either in the rural area or they are caught up in the informal sectors. Those models don't capture the dynamism of this very, very small business that drives the Nigerian economy, and they don't capture the dynamism of the informal sector. So you are going to have your statistic is going to look very good on paper. For instance, last year, in 2023, the tax to GDP ratio was 10%, and last year it increased to 13.5%, and the government was very happy. The IMF congratulated them. But on the street and in the household, for 85% of Nigerian people, there was a big increase in poverty. So when you are looking at tax data and you are looking at tax statistics as an economics, you must look at the concrete condition. When you take this data, they look very good on paper, but on the street, a lot of people are suffering.
Okay.
So
what would you advise?
Minimum tax.
What would you advise? What would be your advice, your recommendation? First off, the committee is a good thing. Let's confirm that from you. The setting up of this committee is a good thing. What would you advise either to the committee or to the government in handling these tax reforms?
Well, I am going to advise that they should focus on really taxing the companies and the rich. And they make sure that there is a very high penalty for those who can afford to be taxed, who are the major tax dodgers in Nigeria. When you put a minimum tax of 800,000 naira, that is below minimum wage. When you have a situation where 85% of the people in Nigeria are poor, you should be able to concentrate. You should have a higher tax bracket that leaves the poor out of the tax base and concentrate your collection of taxes on those who can afford it. When you broaden the net among the poor, you are going to have resistance. So I suspect they will have a lot of problem in implementation, and if they try to impose it, there will be resistance, both from the poor, the informal sectors, and workers. Meanwhile, in Lagos, you could impose that because you could get all those people to help you collect taxes from the small stores by force, but you cannot do that nationally. Therefore, you are going to have a lot of resistance if they try to implement it. As I'm seeing it on paper, it is impossible to implement unless they focus on companies and the rich. And they make sure that those who do not pay their taxes among the rich and the powerful, both foreign companies and indigenous companies, are punished and publicly seen to be punished. But if you want to do it by just getting those who have bread on their head, they are walking around in the street or a little store, and you want to give everybody a tax identification number that is equivalent to their NIN and BVN, and you want to monitor what comes in and out of their personal account, you are going to have massive resistance from working class people.
So what should Nigerians be doing with this information now? I mean, there's been a lot of talk about this tax, the new tax laws, and how it's going to affect Nigerians. So what would be your advice to them? You've given that the advice to the president, to the presidency and the committee, and you've highlighted some of the challenges. But what about the ordinary Nigerians who will be impacted most by these reforms?
My advice to the committee is to grab the low-hanging fruit. They should tax the rich and the companies, both foreign and indigenous, and leave the little people alone for the meantime. If they come into 2026 by taxing the masses of workers and farmers and the little shops and people with their little stores, then the whole implementation will fail. So they should concentrate on those who are very, very rich and who can afford to give government more tax. This will give them time, and if they are successful in doing this, they should make sure they increase the personal income of the poor so that the poor will not complain when they are taxed or when they start to see this tax. But if you are going to tax workers and farmers without increasing their disposable income, that is not development.
All right, Prof, absolutely there for now.
Taxation rate you very good on paper, but it will not affect their individual life.
Okay, I did ask how Nigerians should be reacting, but I think the bulk is with the committee and the federal government, and you've given the best possible advice at the moment. Thank you very much for speaking with us.
I don't want to say that the poor will react by fighting back, so...
Yeah, I get that, I get that.
Yeah,
that's why I didn't press it. Thank you very much for speaking with us.
Have a good day.
You too, sir.